All right, we're pleased to have joining us now for the latest on tariffs and trade. On the eve of that August 1st trade deadline, President Trump says Treasury Secretary Scott Bessent. Mr. Secretary, always a pleasure to see you and have you on the show.
Morning, Joe.
We heard yesterday after we saw the EU and Japan, we heard actually that South Korea, just to paraphrase, it might have been like, what about us? We're here. And then before we know it, we hear from South Korea. Is that typical? Are there other countries that have seen what's happening that are saying, we don't want to be the last country to make a deal with President Trump?
Well, look, we've got the August 1st deadline coming up. And as we mentioned before, the rates could boomerang back to the April 2nd level. South Korea was a special case because they had an election, a new government, so they were not in the position to fully negotiate. They came in yesterday afternoon. They presented a very good offer. President Trump moved the offer up a bit, and we reached a very good agreement where they will have 15% tariffs. They will buy a substantial amount of U.S. energy. They will make a substantial investment into the U.S., both from their sovereign resources and via private companies.
So that sounds like a template. It sounds very similar to some of the other recently announced deals. What will it do for us in terms of exports to South Korea?
We pulled down a lot of the trade barriers, a lot of the non-tariff trade barriers. So obviously, we'll be exporting a lot more energy to them, and then it will be better for our farmers, better for all of our exporters. As the South Koreans said, we like U.S. products, and now what we're seeing with President Trump is these tariff barriers and the non-tariff barriers, which are more difficult to quantify sometimes, are coming down. Jamieson Greer, the USTR ambassador, has a book that looks like kind of 3 of the old New York City phone books that is a list of all the non-tariff barriers by country. They had been substantial. I believe with Indonesia, we marked out something like 11,000 lines of tariffs.
A lot was made of the president's comments about India. We were trying to figure it out exactly what, and it's obviously negotiating and leverage and everything else. And we've heard that we're close with India, and that's one of the majors, other than China, that are left. What was the president's intent yesterday with some of those comments about India? And do you expect something to happen before the deadline?
Well, I don't know what's going to happen. It'll be up to India. India came to the table early. They've been slow rolling things. So I think that the president, the whole trade team's a bit frustrated with them. And also, India's been a large buyer of sanctioned Russian oil that they then resell as refined products. So, they have not been a great global actor.
How about in China, some of that wrapped up? And we'd like to hear it from you exactly what the tone was. And we understand how complex a deal with China would involve and how many different myriad complex issues are involved. But where does it stand after the weekend or the last few days?
Yes, so we met for 2 full days in Stockholm. The Chinese are tough negotiators. We're tough, too. It was led by the vice premier, my counterpart, Hu Feng, who I have great respect for. He is both a statesman, a tough negotiator, and very senior in the leadership. We pushed back on them quite a bit and made our positions known. I believe that we have the makings of a deal. They announced that we would have a 90-day roll, which was a bit premature. Ambassador Greer and myself will be speaking to President Trump today about whether we will be doing the roll by the August 12th deadline. There's still a few technical details to be worked out on the Chinese side. Between us, I'm confident that it will be done, but it's not 100% done.
Secretary Bessent, just in terms of the China negotiations, we had Leland Miller on earlier today. He does the China Beige Book report. He said that when you had the export controls that were put into these negotiations, and China forced that issue by throttling our exports to us of the rare earth minerals, that changed the leverage and gave China much more leverage in the situation. We heard this morning that China is asking questions now about NVIDIA's H20 chip and whether there are concerns, whether you can track those chips, and they want reassurances on that front. How much more complicated is the Chinese negotiation than it has been with any other country you've dealt with?
Well, one thing I'll tell you is that is a gross oversimplification from your previous guest. I didn't hear what he said, but I can tell you, they have used the rare earth magnets as a negotiating card, but we've got plenty of our own, and we at a point had 12 countermeasures on against them. They all national security based. We have dropped those. The magnets are flowing, and we'll see. But you've got the two largest economies in the world. And Becky, what we've never seen before in recent history is if you look back to the economic negotiations, 70s, 80s, even the 90s, you look at the Plaza Accord, the Louvre Accord, some of the big economic negotiations, even when the U.S. came off the gold standard in the 70s, we were negotiating with our allies. Our allies were our biggest economic rivals, and then there was the Soviet Union, who was our big military rival. They were a small economy, but a military powerhouse. Negotiating with China, we are negotiating both with our largest economic rival and our largest military rival. So you're right to say that this is, in a way, three-dimensional chess.
Mr. Secretary, one of the things we're all watching is the Treasury market. And China, of course, had been a massive buyer over the years of our treasuries. And I'm curious, as these negotiations continue over trade, and we start to see some of the numbers in terms of what they're buying or not buying, or frankly selling, how you think that could influence or change anything?
So, and really for most of the Asian economies, 2017 marked the high point of their ownership of U.S. Treasuries. We've seen a gradual decrease since then. The Treasury market really hasn't featured in any of these negotiations.
Mr. Secretary, I have a real specific question to ask you about some of the unintended maybe consequences of tariffs. Ford hasn't lost money in a quarter since 2023. They make almost all their cars here. Now they're doing. I think they're trying the best they can to have U.S.-made vehicles, but they still import some parts. As a result, $800 million in tariffs pushed them into wiped out the profit entirely. Are there still carve-outs available? If a company like Ford comes to you and says, look, this is how this affected us, or comes to the president, this is a direct consequence of what's happening. That's not what was intended with the tariffs, was it? And it's not what we want, I don't think, to cause Ford to report a loss, even though they're trying their best to make all their cars here.
And look, I admire, Joe, I admire Ford. Ford, I believe, has the highest U.S. production of any auto manufacturer. I think that there were numerous circumstances with Ford. I believe that the Ford, F-150, 250, their big truck series is made out of aluminum instead of steel, which is different than other cars. So I think maybe the aluminum tariffs have hit them harder. We will be negotiating with Canada on those. So, I think with Ford, it's probably been idiosyncratic.
The number we got yesterday for GDP was above expectations. Great sounding number, 3%. But if you average it with the first quarter, many are pointing out it's about 1.2% average GDP growth, which is slower than in the last year. Obviously, the second half will tell the tale, and the big, beautiful bill, a lot of those positives, some of the tailwinds for businesses probably aren't evident yet. But there is some, it looks like, maybe some lessening of demand. One of the key drivers, I think, is final sales to private domestic purchasers. You probably are more familiar than I am with it. Slowest growth since 2022, and they're tying that to tariffs. I mean, there's a lot of long-term benefits, I think, the president and you see in tariffs. But near term, do you need some other things to kick in, maybe lower interest rates to offset some of the effects of the tariffs?
Well, Joe, maybe you should call the folks over on Constitution Avenue and tell them tell them what you're hearing. That wasn't what Chair Powell said in the press conference yesterday, and I think we have great momentum in the economy. Now that the tax bill is passed, there is great certainty. I think that there has been a big holdback in CapEx until companies were sure that they were going to get the 100% immediate expensing, and then they'll be getting, and that's permanent, they'll be getting 100% immediate expensing for factory structures and ag structures for the next 5 years. So, we're seeing a CapEx boom that started. I think it's going to really accelerate third, fourth quarter. Andrew and I were out in Sun Valley. A lot of the tech titans out there are talking about the continued AI acceleration, and we're expecting to see that productivity kick in the first or second quarter of next year. So I would expect that we are going to see an economic acceleration from here. And again, if I were the Fed, I would try to think a little about the 1990s Greenspan model, where you saw the productivity kick in from the previous decades adoption cycle in office technology, in electronic technology. I think there's a good chance we could see a replay of the 1990s, and it's going to take a little bit of imagination, same way Alan Greenspan had.
With AI as well. I mean, one of the best things in the report yesterday, the PCE, 2.5%, that's almost where the Fed wants it to be versus previous 3.5%. So that's down. But you understand, Mr. Secretary, the more that the president or the administration crows about the strength of the economy, that just sort of gives, it gives Jay Powell more rationale not to cut at this point. But when you throw in the PCE, along with maybe the average of the two quarters at 1.2, I think it makes it much more compelling. We had a couple of dissents. We haven't had that two of them since 1993.
Well, I also think, I know Chair Powell said at the ECB annual conference in Portugal that the Fed would have been cutting if it weren't for tariffs. And Joe, to your point, we haven't seen any inflation, and PCE is quite nascent. So I'm not sure what the case is here.
But at this point, you figure, when will we hear? That's a good one. So he makes it till May, Jay Powell. Let's assume that. It's not unusual to see an appointment announced, I don't know, well before then. Do you have any idea on when we might hear what the president is thinking in terms of Chair Powell's replacement?
I do. I'm going to be.
Can you tell us?
I'm going to be. Sure, Joe. If you could just lean forward, I'll tell you a little.
That's Connie Chung, whispered in my ear. Yeah,
so
that's right.
We are putting together a very good list of candidates, and remember, there are going to be 2 seats opening up. Governor Kugler will be leaving in, I can't remember whether it's January, February Chair Powell in May, so there will be 2 seats opening up. I'm putting together a list for President, Chief of Staff to review. We'll be interviewing people. So I would expect that we could have an announcement by the end of the year.
Is Powell definitely leaving? Because even though his chairmanship is up, his seat, I think, extends a little longer.
Right. His seat extends for 2 years.
2 more years.
2 years. It would be highly unusual for a chair to stay on.
And you're helping with the search, obviously. We shouldn't read into it any like Dick Cheney type stuff, should we, Mr. Secretary? Look, Dick Cheney looking for a vice president, and then lo and behold.
As I keep saying, I think
you would serve.
He likes his job better.
He does.
It says the food's better at the Fed, though.
He might be able to keep that job and have the other job.
The food is better at the Fed, and I can tell you the Treasury building. We run it very well. We keep it in good shape. We don't do any major building projects. We do things as needed, and it's a great historical building.
Mr. Secretary, I have one actually Fed question. Do you think that the Fed chair, because you do have to have the whole board kind of with you, could you imagine actually putting somebody in who has views that are otherwise different than the rest of the group and is therefore unable to effectuate the changes that perhaps the president would be pursuing?
I think, Andrew, that we want the person who's going to do what is best for the American people and for the economy. And as Joe said, we had the first 2 dissents for several decades. So it looks like there's already a schism in the board. So there would be 2 more voters. We would have a majority of the board, but of course then there are the regional governors who rotate their voting status.
Did people misunderstand that some of your comments and extrapolate it to Social Security, Mr. Secretary? Or was that actually something you're thinking about, the privatization?
No, it was ridiculous. I was giving an interview, and I was talking about the $1,000 baby bonds that every American citizen, every newborn is going to get. The Democrats hate this program because it brings capitalism and markets to every American, not just their constituents at the upper end. Over time, the compounding is going to be an incredible supplement to Social Security, not a replacement. It is a complement. And what I said was Social Security will continue as it is. It is intact. Everyone will get their check every month. But it's very exciting to me that there could be a big payout at the end of when people turn 59 or 60 for the first time, Joe, because as you know, bottom 50% of households in America do not have financial assets, and President Trump is giving them financial assets. I believe that the reason you all have the mess you are about to have in New York, Caracas on the Hudson, is because people have given up on a market-based system. And the Trump administration is going to make every newborn a shareholder, and they are going to have a stake in the system. When you have a stake in the system, you do not want to bring down the system. So the power of compounding could mean a big payout that would be a complement, not a substitute for Social Security.
Oh, yeah, that is horrifying. Really it is, and it is horrifying to some. If you're not beholden to the government, sort of undercuts a lot of one side's programs, doesn't it? If you're, that's horrifying. Mr. Secretary?
Well, Joe, the other thing, too, is, I got to say, some of the senators who criticize me are the ones who take the most advantage of, they don't have insider trading rules. So Senator Wyden criticized me. He has a he's a statistical aberration. Somehow he has made over 120% one year, over 70% the next year. If he were a private citizen, the SEC would be knocking on his door. Same with the Pelosi family. How does this happen?
That's a good point. It's a good point. Mr. Secretary, we appreciate all the time again that you've given us and hope to see you frequently as we did today. Thanks.
Good. Thank you.
Okay.